All right. Well, good afternoon, everybody. East Coast time. It's just after 3 o'clock. Good morning, good evening, wherever you're coming in from. Glad to have you here. You see a lot of red on the screen behind me, but what I'm going to be teaching you hopefully will show a lot of green on your screen. I know it has for me. I'm going to show you as much as I can. This is a full week one of System Mastery. I'm going to get into that as well as what we're covering over the next 6 weeks. But I'm going to share with you my favorite trending strategy. I'm not holding anything back on it. You guys will also have a trade opportunity for you. I've got 2 trades, actually. I've got one I placed. I'm going to share that with you. I'm not going to give you the exact trade, but I'm going to give you the asset it's on, all right, because I can. The other one I did not place because I thought we could do that one together. All right. And I'm going to wait until after the live event before I place mine. So hopefully we can get this all wrapped up before 4 so I can place that trade. So I don't want to waste a whole lot of time, but thank you all for being here. Let's go ahead and get going. First thing I want to mention real quick, because I need to, is the disclaimer that you see on the screen. You can take a picture of this. You can also pause the recording. The recording is going to be the actual link we're on right now. That StreamYard link is the recording, and it will be available on demand, I believe, 15 minutes after the live event's over. But I'm going to mention 2 quick things. Number 1, stock options and crypto have large potential rewards, but also large potential risk. And of course, me and my compatriots here at Tom's Trading Room, Optionetics, and Gulfport Analytics, we're here as educators, all right? We're not investment advisors. We do not give specific trading advice, and I mean individualized trading advice, all right? There we go. So I am going to get into System Mastery Week 1. This is week 1 of a 6-week program that includes more than just weekly sessions. I've got 3 sessions a week that I'm going to be doing with you involving systems in one way or another. So today, I want to talk about my mentor's 1030 crossover. I've got current trades ready to go. I've got 3 of them, but we're going to sift that down to my favorite. Crossover to quantum strategy, and we're going to see if those 3 fit the quantum strategy, because that's the improvement that we made over the last several years. Live case studies on the webinar. I got 1 that I'm going to share with you. I'm going to share another one with you here as we get later into the program. And then becoming a full member of my mastery program. That means coming to me through week 2, 3, 4, 5, and 6. So week 1, doing the whole thing for you right now. All right. So let's start off with what type of trader you are. It's funny. I was just grabbing a quick bite to eat before coming in and turning this on. And my wife was in there making lettuce. And it's funny because we were sitting, the family's over, because what? It's a Wednesday. They don't wait till the weekend to come over. They all show up on Wednesday afternoon. And she's like, I got to wash some more lettuce. I'm washing lettuce. And immediately my pea brain goes to the movie that Eddie Murphy was in, where he was working at McDowell's instead of McDonald's. And I believe it's Louis Anderson, the other comedian, that's sitting there, and he goes, hey, I'm washing lettuce. Next, I'll be on fries, then the grill, then it's assistant manager, and that's when the big bucks come in. And I started laughing about that because that's where I went to him, cracking up. My wife's cracking up too. And I said, all right, I got to go. I got to go back to work. So I'm sitting there, I'm thinking, this is a lot like what type of trader are you today? So if you're a novice, it's like you're washing lettuce at McDowell's. And then you graduate to being a different type of trader. And many of you have been on this program, have been following me for years. I mean, you know what I'm talking about, okay? So I'm actually I'm turning the chat on because I realized it was off. I apologize for that, but here we go. So welcome everybody. Let me know who's coming in here, where you're from, what you're doing, and more importantly, how long you've been trading. That's an important one that I want to know. How long have each of you in the room been trading? And it doesn't have to be successfully, because I did not start off as a successful trader. In fact, I started off as a discretionary trader. That's the hoper, the thinker, the dreamer, the fear of missing out. We call them meme traders today, the ones that will follow the loudest mouth on TV or in a chat room that doesn't really have a lot of skin in the game. So that's where I started. I was a discretionary trader back in 1986, thinking and hoping, hoping and thinking. I took in 1987. I did the worst mistake possible at the worst time. I put all my money into one thing. It was the loudest guy on Financial News Network, and it was on basically it was Black Monday, 1987. And then I quickly got taken out on the next day, which was Tuesday. The markets were down really hard. I got a margin call. I'm not going to bore you with the details, but I graduated from discretionary. And to graduate from discretionary fundamental means you really got to think about, well, what did I do wrong? And do I want to keep kicking myself like this, or do I want to change? So I started looking at fundamentals, and I realized fundamentals were really for investors, not traders, because the fundamental information comes out about once a quarter. Now, we can use fundamentals to be traders, but most people use fundamentals as growth investors. Then I move on to technical analysis. The very first piece of software I ever used was something called Metastock. How many of you in here have heard of or used Metastock? Now, I used Metastock. It was on a compact 386 laptop. The laptop was about this thick, weighed about 20 pounds, maybe not that much, maybe 15. That was a great computer back in the day. 3.5-inch hard disk. You know, the floppy disks, I think we might have called it a floppy, but it was 3.5-inch. The floppy disks were the 5 1/4. Now I'm really showing my age here. So I'm using this, and I bring up Metastock, and I see, what was the first indicator I ever started working with? Stochastics. George Lane, the inventor of stochastics. He looks kind of like Santa Claus to me. And I thought, wow, this is it. This is all I need. What I didn't realize was stochastics was like 98% of the indicators out there. It's lagging, which means the market's already making its move before the indicator tells you it is. So I finally moved into something called rules-based trading. Rules-based trading is where you could take fundamental or technical analysis and you look for patterns that repeat themselves over and over again. And I'm not talking about visually. I'm talking about putting your data into a computer, quantifying that data, and then finding something that repeats itself over time, forward testing that data, and then finally trading it. And I found rules-based trading strategies really fall under one of these four areas: trending, seasonal, contrarian, volatility. Now, I'm a big seasonal trader, but I also have trend trading strategies, contrarian trading strategies, volatility trading strategies. I'm going to teach you my best trend trading strategy right now. And that means let's start with, it's very simple, but simple works in an area where we have all of these indicators now, thousands of indicators. AI is now part of the indicator world too. But let's move back to something simple that's worked over time. And what I'm talking about is a moving average. Now, a moving average is just a moving average is getting a bunch of numbers, summing them together, dividing by that sum to get the average. And then every day you take that same group of numbers and you average it together, and you get what's called a moving average. Now, I look at two moving averages, and when they cross, this is called a moving average crossover. Short-term moving average is going to be more reactive than the long-term moving average. And as these numbers gyrate up and down, those lines will cross. Now, guess what the biggest news story is this week, other than Chairman Powell causing this behind me to happen? It was the death cross. Now, you may have heard of what is the death cross? It's a moving average crossover. It's when the 50-day moving average crosses below the 200-day moving average. It happened in Tesla late last week, and it happened in the S&P 500 2 days ago on the 14th. The 50-day moving average crosses below the 200-day moving average. All right. And of course, yesterday and today, it's showing up. Here's the S&P 500 where the 50 period moved below the 200 period, even after that big bounce back. So you see the big bounce back? Well, the 50 period moving average comes and crosses below the 200 day. And of course, all of the pundits are out there. S&P Towers' first death cross 3 years. S&P death cross, recession fears, death cross, bearish death cross, benchmark S&P down on death cross. You know, only one of these actually say it may not be as ominous as it sounds. Somebody might actually have it right, because we did the work on this and we found that with the S&P 500, when the 50 crosses below the 200, in most cases, that's actually a bullish sign. So I'm sharing a bit of investment information with you right off the bat. Okay? Take a look, and I've got it as big as I can here, but you can see this is data going back to 1981. All right, 1981, I was a teenager. I was a junior in high school in 81. Well, yeah, sophomore / junior, depending on what part of 81 we were in. But death cross in 81, all the way to the last one we had, which was 2022. And I'm talking about a full repeat. What I want to show you is that there's more green on the screen than there is red. So to me, the death cross is a buying opportunity. And I'm not talking about as a trader, I'm talking about as an investor, because 75% of the time, 3 months later, the S&P's higher than the day the cross occurred. 1 year, we see a double-digit move higher than when the death cross occurred. Okay, 9.5% average, 11.2% median. What this slide is generally telling you is that, guess what? The other side of the crowd is where you want to be. That's the first thing. The second thing I'm trying to tell you is this. This is an investor trade, all right? When the 50 crosses above the 200, that's called the golden cross. The golden cross is when it moves higher. The death cross is when it crosses below, all right? Those can be argued whether they actually work or not. I don't think they do. I think for traders, you want to fade that. But what moving averages can be used for traders in the 30 to 60-day time frame? I want to talk about that. I want to talk about my mentor's favorite crossover and how I approve these. That's the basis for today. And I've got a ton of data for you. So I'm going to try to make this as interesting as possible. I've got a couple trades for you. So that's going to make it interesting. But what I want you to think about is I want you to think about the fact that I didn't just throw a dart at a wall here to do this. This is a lot of information and a lot of computer testing to get to the analysis that I want to share with you today. All right, so my mentor is George Fontenilles. Met him on the American Stock Exchange decades ago, all right? Co-founded Optionetics with him. May God rest his soul, all right? He's been gone from us for well over a decade, but there's not a day that goes by I don't think about this gentleman and what he did to usher me in as a trader. And yes, that's George on the left, and that's me on the right. A little thinner than I am today, a little more hair on my head, and a little more color in my skin. Oh, youth. Okay, so George's crossover looks like this. I want to get right to it. We're bullish when a 10-period SMA, that stands for simple moving average, crossed above the 30-day simple moving average. And we're bearish when a 10-period simple moving average crosses below a 30-day simple moving average. So think of this as the 10-30 crossover. When the 10 crosses above the 30, we're bullish. When the 10 crosses below the 30, we're bearish. Okay? Now, upon first glance, there's some stocks this works really well in, and there's some stocks it doesn't work well in. But it works well when you have this with the right stocks. It works well in bull markets, and it works well in bear markets. This is an example of Tesla earlier this year or late last year when we crossed above at 240 and we crossed below at 400. And we're creating the cross above here very recently. And then here's gold, works in commodities. The bullish period of gold, you can use the cross with whatever other indicators you have below 245. Where's gold trading at right now? I saw 303 on my screen this morning. What about Bitcoin? Well, Bitcoin has some crosses that works, All right. Worked here at 60,000. Bearish at 100. Bullish at 95. Bearish at 95. And then you're getting chopped up down here around 60. And when I mean chopped up, it's just flipping you back and forth for very little differences. Okay. But a rules-based trader does this. We research a pattern like the 1030. We set rules. If the 10 crosses above the 30, I want to buy. If the 10 crosses below the 30, I want to sell. We back test that vigorously, forward test it, and then finally, once we're happy, we start to apply trades to it. Okay? So I want to share with you my very first back test, right? And I used Google. I used Google on this. I'm going back, guys, into, I mean, we're talking 20 years ago when I started doing this. And so 20 years ago, here's a 10-year back test on Google from 2004 to 2014. And it's very simple. The entry, I call it the 1030 up. The exit, I call it the 1030 down. And when I got the exit on the bullish side, it immediately flips it and becomes bearish. So if you really were going to trade this, I mean, exactly the way exactly the way we want to trade it, then you would be long and then short and then long and then short. You'd never be in cash. So how did this turn out? Well, here's my results. There's a lot of green. There's some red on the screen, but mostly green on Google. Google turned out to do rather well with this in its 10-year move. In fact, the total profits look like this. And I can share this with you on the screen and not even have to enlarge it. So it's got a nice big number for total profit. Here's gross profit. Here's losses. 78 trades, about $4,000. Now, remember, this is the stock. This is not options. This is the stock. $4,000 profit, 41 winners, 37 losers, 51%. And you might say, 51% is not that much, Tom. Well, in a trending market, you have to realize that in a trending market, markets that trend, if you use that, the trend is your friend. And if you're a turtle trader, Richard Dennis and the turtle traders used to use trends. They will only write 3 out of 10 times. But the 3 times they were right had to be more in wins than the 10 times or than the 7 times that they were wrong. It's hard for someone to be wrong 7 times in a row and then take that 8th trade. It's hard to do. So anytime you can find a trending strategy that works better than 30% of the time and gives you positive numbers, a positive average trade profit that's healthy, that's good. This is 51 to 46. Okay, this is the actual strategy on its own. Now, if I scan this, and I just scanned this recently, and I use the tools at Tom's Option Tools. So at Tom's Option Tools, we have a scanner, which is the crossover scan. And all I did was I set the moving average dates. I'm going to blow this up for everybody. I set the moving average dates for 30 for the long days, 10 for the short, did it on the S&P 500. And I said, oh, let me put some filters in there, meaning I had a liquidity filter. I had delta filters in there for the options, maximum output, meaning I didn't want to look at more than 50 stocks if it gave me that. And then minimum days to expiration. I could set this as long or short as I want, but I put it at 15 just just to start this trade, this crossover. I got 3 stocks that popped up. I got Vulcan, I got Costco, I got Live Nation. All three of them are expensive stocks. I mean, Costco was at $9.52 when I ran the cross. Vulcan was at $2.33. Live Nation was at $1.27. These are all bullish crosses. Bullish opportunities in an uncertain, let me say that again, in an uncertain market. Okay. So where do we go from here? Well, this is the 1030 cross. Okay. Let's look at each chart. This is Live Nation. So Live Nation, as I can see, and what I'm looking at is I'm just looking at the chart for the last 6 months because that's what all of you would do. You'd say, well, how did it do in the past? Okay, here was a sell at around 135, and then here was a buy at around 137. So that was kind of like a 2-point loser. Here's a sell again, pretty much where the buy was. It ran up as high as 155, but it turned real quick. By the time we get the sell signal, we're right back down where the buy was. And now we're getting a buy signal on Live Nation down here in the 120s, 128.41. So this area here was very choppy, as you can see. Let's look at the results when I look at 7 years. When I look at 7 years on Live Nation, this is what I came up with. Only 33% winners, right there. A 0.27% ROI. Terrible. There's your percent return, minus. It didn't work on Live Nation. Okay. Let's look at Vulcan. Vulcan Materials, it had a nice, from here up, it looked like it worked. Then I got the sell signal, and I got a buy signal. The sell signal, maybe it skimped out a point or two. This was definitely a loser, because if you were buying at 270 and then you were selling it at near the 260 area, that's a loser. And then down in here, this is a lot of noise. So this does not look good right now on the 6-month chart. But let's go back and back test it. 7-year back test on Vulcan. 2.57% return. That's a positive. 53% winners. Okay. And we're talking about, again, folks, when you look at that 2.57%, you might say, that's not a lot of money. Remember, we're talking about during short bursts of time, not buying a hold for 7 years, but those short little bursts of time on the bullish sides only. Okay. Better than the first one we had. Let's look at Costco. Costco looks like it had a great buy signal back here at the beginning of November. And then here's your sell, and here's a buy. And then the sell signal looks like it's right by the buy. So I'm looking at this, I'm thinking, all right, well, you're getting some decent moves here, but what's the long term look like? The long term was 69% winners with a 5.3% ROI. Okay, so far, and it looks like the math expectation turned out pretty well with this one. But again, we're just talking about stocks. We're not talking about options yet. I'm going to get to that in a moment. So far, what we've done is we've looked at the 1030. We've analyzed the 1030. We realized that there are some stocks it works on. There are some stocks it doesn't. The ones that it works on, I like to call alpha stocks. They're the ones that move around, that cause extreme moves, all right, on their charts. The more volatile it is, the more it seems to work, right? This is what I've learned. The problem with the moving average crossover is you get too much noise during the chop. The chop is when we get these buy and sell signals, and you just get eaten up very slowly. I call it death by 1,000 cuts. Okay, you know, if you small abrasions add up. So I want to take you from the moving average crossover to something called quantum scripts. Quantum scripts is the part where I attempted to and did improve the moving average crossover system. I did it by adding a noise filter on. And the noise filter I use is quite simple. It's the 200-day moving average. So the way that we set this signal up is when the 10 crosses above the 30, where's the stock price at that time? If it is above the 200-day moving average, then I want to buy it. If it's below the 200-day moving average, I want to toss it out. So what that does is that gets rid of a lot of signals, and it gets rid of a lot of noise, because it's only going to take bullish signals when the stock's above the noise filter, the 200-day moving average. Or if I'm bearish, if I get a bearish crossover, then I want to make sure the stock's below the 200-day moving average, so we're in the longer-term trend. All right. These new settings are designed to remove the choppy trades. You get less trades, you get smarter trades. That's what we do. All right, so back again. All of a sudden, by doing this, what did we do? We increased our average trade profit by triple. All right, we didn't do anything to the strategy other than add the extra noise filter in. So Quantum Scripts Bull shows us for the period from 2017 to 2022, 82% probable profit. What has it done since then? I'm going to share that with you. In fact, it's actually, I think, 84% for the last 2 years. So with a 7-year back test, still looks really good. When I run the Quantum Bull scan with the noise filter on it, Vulcan got dropped off. It no longer was part of the scan. Costco was part of the scan. Live Nation was part of the scan. The interesting thing is that we know Live Nation didn't work in the last 7 years. All right. It was part of the bullish scan, but it wasn't one of those great alpha stocks that I like to use. But Costco is an alpha stock. So when I run the 5-year back test on Costco, when I ran a 7-year back test, we saw 69% results. When I run the 5-year back test and I look at options, not the stock, but options, that jumps to 80% profitable per trade. Okay. 142% returns on the options. Average days in the trade was, I think it was less than 6. It was 25 to 65 days on the expiration. Okay. 15 total trades. That means 15 bullish trades in the last 5 years where we had the crossover. The bull crosses, the 10 crosses above the 30 and is already above the 200-day moving average. Now, I'm looking at this and I get a buy signal. And I'm talking about very, very recently. And I'm kind of a fan of, I don't want to buy the stock. And I also don't want to pay more than $500 for the option. So this is the part where I go from spotting the opportunity to creating the alternative risk trade. So what does an RBT option trader do? They look at where's the target, and our target for Costco is very close to 1,000. So I'm going to use 1,000 because that's a round number. So we look at our target price that the stock's going to go to. We look at our target time that it should take place. All right. And that is a little bit around 30 days. And we're going to find an option between today's price and today's time target. Well, 30 days puts us in the middle of May. And then if I've got something that goes up to 1,000, then I want to see, well, what does 1,000 look like on the options? So I already did that. I set it up for you. I haven't done this trade yet, but I set it up. And I just set it up like, an hour ago? So what I'm looking at is the stock was trading around $966. And I was looking at the 990 1,000 call spread. That's buying the 990 calls and selling the 1,000 calls with the May 16th expiration date. Let me blow this up because I know you can't see it. There you go. 990 1,000. I was trading right around $4. Buy the 990 call, sell the 1,000 call. These are the May 16th expiration. They were trading around $4. And so if I were looking for that to double in value, then that 4 would need to become 8. Well, this is a 10-point spread, so that can easily happen. Okay. So one contract going to cost you $400 plus a little bit of that execution fee. So there's that. And again, that is the May 16th Costco 990 1,000 call spread. Buying the 990 calls, selling the 1,000 calls on a spread, $4. $4 is $400. If you were to buy the stock right now, 100 shares of the stock is going to cost you $96,664. Damn. The call itself, if you were to buy the 990 call, it's going to cost you $21. Well, if we have a target of 1,000, and if it gets there, you know that 990 call at 1,000 by May's expiration could only be worth 10. If you pay $21 for something worth 10, you lost 50%. That's why this spread makes the most sense right now, because option premiums are higher than they've been on average. Therefore, you've got to put this in your favor. The way to put it in your favor is by spreading or by selling volatility. And this is the best way to hedge volatility. Have some direction, have a better reward to risk ratio, etc. All right. So there you go. So if I were to kind of summarize where we are right now, the quantum summary, the 1030 crossover, 200-day moving average filter. So again, what are we doing? We're looking at the 10-period moving average. We're looking at the 30-period moving average. We're looking at the 200-day moving average. When the 10 crosses above the 200, okay? When the 10 crosses above the 30, that immediately tells me this is a bull. But where's the stock price? Stock price has to be above its 200-day moving average. There we go. Okay. Bullish trades tend to stay on longer than bearish trades due to market movement. That's because it takes, 2 to 3 times as long for a stock to go up than it does to go down. So your bearish trades don't have to be on as long. Now, I have a curated, back-tested list. You might say, why did I give you all the rules for this? Because, really, because it works. But my software constantly curates the list and creates the best list to scan from. Now, you could go in and you could say, great, you got one stock, Costco's on that list, but what about the other 124 stocks? I have 125 stocks, I believe, that this works really well on. And so that 124, my software is constantly scanning for those to give you the buy and sells for that particular day based on exactly what I just shared with you. Okay. And that's for our full members. Those of you that are going to spend weeks 1 through 6 with me, you're going to get that list. In fact, I have curated a list for every single thing that we're talking about here that we're going to be talking about over the next 6 weeks. Now, at this point, let me just take a few. Oh, here's the back test. I want to share with you one more time. So 84%, this was 2018 to 2023, 84% 2023 to just last week. So the percentages really haven't changed. Okay? The percentages really haven't changed. Some stocks have dropped off the list and some stocks have come on the list since then. But most of this is relatively staying the same. Now, let's stop for a moment. Let's look at some questions. First one I see is Tony's got a really good question here. He says, Costco, the spread's now 410. Is it still a good idea? I think it's I was looking at it was 450 this morning. So that's up to you. I haven't taken the trade yet myself, but I like it as long as I can get out of it before it reaches. I don't want to do it for 5 because that means I got to stay in it for the entire length of the spread. But if I can do it for 4, I can do it for 425. I'm going to take a look at it here in the final minutes before the close. But again, that's up to you. I like it as long as I can get out as a double before expiration because, again, Costco, the most the spread can get to is 10 points. If I buy it for 4, if it creeps up to 8 and I could sell it for 8, I just doubled my money on something that moved what? Just a few percentage points. All right. So that's the big thing I'm looking at. All right. Love George and you and those Option X beginnings. I did too. Love George. Great bloke was George. Love it. All right. So, any other questions before we continue on? I have another trade I want to share with you guys too. This one's different. It has something to do with weeks number 2 and week number 5. All right. But I thought I'd go ahead and share it to you right now because I've actually taken a trade in this one, but I want to share with you what it is, and then you can facilitate a trade for yourself. It's an ETF, by the way. So it's something that's very, very liquid. I wanted to share that with you guys. All right. So why about gold? Maybe that's what about gold? I'm long-term gold. I've been long-term gold for months now. We've been taking option trades on again, off again on GLD, but and that's actually using a strategy I'm going to be covering next week. But yeah, I mean, gold as an investor, I like it. It's a hedge. I love it. But as a trader, I'm looking for the next buy signal. So with that, let's go ahead and let's talk a little bit about the rest of earnings mastery. So my goal with you today, and my goal for you for the remainder of 2025, what I'm going to do is I'm going to turn a small group of traders, and I mean a small group. We're gonna have around. I think I'm going to end up having about 50 people in this group. That's where I think we're going to cut it off. Small group of traders into rules-based traders. So I want to take you outside of washing lettuce, as I called it, and I want to get you to where the big bucks are. And to that, we want to get past the discretionary trader. We want to get past the fundamental. We want to get past technical. We want to get into total rules-based traders. I'm going to share with you my best rules-based trading strategies that I still use to this day. There's only a handful of them. I plan on giving you the rules. I plan on giving you the codes, the entries, the exits, everything. So here's how you can join me in weeks 2 through 6. By the way, we just did a little bit with session 1. I'm going to be doing a review on this, and I go into much more detail. I wanted to really kind of wrap this one up inside of an hour, but that's called Quantum Trader. We'll be doing the bearish stuff here next week. Okay. We are also going to go into next week. I'm going to get into the money counter. I'm going to go into the crypto counter, but I've got something new. Then as you go, I know money counter. No, you don't, because I got something that you don't know that I'm going to be sharing with you in money counter. It's called the MC Trader. And the MC Trader is a leg up from money counter because it does the work. It's the workhorse that gets me from the stock to options and shows me exactly how I find the best options to work around money counter stocks. And it actually throws out some of the money counter stocks because it could not find suitable options for those trades. Something really cool. Jay, can you put that link up, by the way? And so that's going to be in week 2. In week 3, we've got velocity, my velocity strategy. And my velocity strategy is, this is a volume strategy. It's a volume strategy that we've used I've been using it for years. It's a great strategy. And in that session, I'm going to show you the patterns that we have have 100% or more gains on these bull and bear strategies. Session 4 is going to be iSpy. iSpy is a swing trading strategy. So if you like short-term trades, if you like those trades that happen around a week or so, this is one of the few weekly trading strategies that I use. I'll share it with you. It is a 3-part strategy. Once you understand, it's very easy to use. I've got the scans for that as well. We're going to share that too. I have scans on everything I'm sharing with you. Session 5, we're going to go into contrarian trading with Darknet. And in my final session, I'm going to be talking about Money Patterns Action Plan, where we go through, and I'm going to show you something called the grid scan. You're going to have access to that too. And that's going to be where we take majority of the strategies and we're looking for layering. We're looking for, hey, does something come up on seasonals and come up on contrarian? Does something come up on velocity or quantum, and does it come up on seasonals, etc.? In fact, I want to share my next trade with all of you right now. So my next trade actually came from the grid scan. And we're going to talk about this in the coming weeks, but I wanted to set it up for you now. So we go through weeks 2, 3, 4, 5, 6. We can even make adjustments. I'm going to share with you how I did the different trading strategies I've done using grid scan and using today's strategy. So grid scan results for today came up with one multiple scan. And that multiple scan is the United States Natural Gas ETF, UNG. So UNG came up with a trade. Now, this thing's trading below 17. And I've been looking for a reason to get into UNG because it typically makes a good hedge. But I thought it was a little bit frothy around a month or so ago. So here we are 6 weeks later, and it's no longer in the mid-20s. It's dipped down to become a teenager. It's come down to some really good support right down there just below 17, which is where we are right now. It found a money counter buy and a Darknet buy on the same day. So for me, we like to call that trade a 1-inch putt. And that means, if you're a golfer and, your ball is 1 inch from the hole, usually whoever you're golfing with, they'll pick it up and give it to you and say, go ahead and take it because it's going in. Now, I can't guarantee it's going in when we talk about these trades, but I really like when we get these layers that happen. I didn't want to wait till the end of the session to start talking about grid scan on week 6 without giving everyone a grid scan trade today. So we will go through the grid scans as we move into the latter weeks. Now, this is going to come with software. It's going to come with scans. All right, so what I'm going to do is I'm going to do a software upgrade for all of the folks that join me in System Mastery. So you're going to have access to all of my scans, my System Mastery scans. we're going to give you complete trader software, so you're going to have access to the money, all of our money patterns, but you're also going to get access to that GridScan software, which until recently was only available as a partner. All right, so our partner only had GridScan, so we're going to give GridScan to you as well. The subscription for the software, we're going to run it all the way out to the end of the year. So it's not a 30-day or 60-day complimentary. You got it all the way to the end of the year. Plenty of time for you to get really loose and nimble with these scans. So the program all kind of wraps up like this, folks. It's a 6-week program. We're going to run it every Wednesday. All right, you're going to get the recordings all the way to the end of the year. So not only that, but each week I'm doing something like this. They're typically going to run 90 minutes. Today's is going to be a little less than an hour. All right, so that's the program. Also, we're going to do separate lab programs where we're going to come in and we're just going to teach you how to use the software and how we run the scans and how you can manipulate the scans a little bit if you want to do that. So that's called our lab sessions, our weekly trade lab sessions. Also, we're going to do live sessions every week where we're going to put the pattern of that week to the test. Okay? Software upgrade, like I said, you get the software subscription for the rest of 2025. This is a $6,600 value. When you add all this up separately, we're going to do it for $1,495, $1,495. All you have to do is just click on the link that we've pasted into the chat box. So open your chat box and you can see Jay putting a link in there. You can see my link is in there with you as well. It should be clickable. Means you click on it, it's going to open up the page, the checkout page. And when you open the checkout page, it's going to look like, let me show you what this looks like. It's going to look like this. So eventually you're going to get to the actual link page. But before you do, you might open up the checkout page and it might look something like this. Let me move this over and share it with everybody. So this is what it's going to look like. It's got my pretty face on it. And then you're going to be able to review everything that I've talked about here, every session that we're doing, everything that's included. Okay, you see that. And then limited time offer, and you can see that the price is $1,495. If you click on the Join Now link, that's going to take you to this area here. You can then review it. If you're already a Stripe user, then it's just going to ask you to confirm, and then you can move to the Buy Now. Once you have signed up, you're immediately going to get a welcome message from me, which is going to include your next steps. Next steps to next week, next steps to Trade Lab, next week steps to the live trade webinars, next steps for the software. You're going to get our number, all right, our live support number. You're going to get all of that, okay? So this is something that's brand new that we are offering. We never offered this before to any of our we offered to our publishers, but it was an addition to publishing pieces, right? This is not part of a lifetime offer. This is part of our educational offering, and it's a step up for those of you that are publishers. I'm giving you my very best offer. So for everybody else, $6,600. But those of you here, my partners, my lifetime members, you get it for $1,495. And like I said, if it includes everything. It includes the everything I just mentioned. Now, Roger has a really good one. Roger says, is there a discount if you already have Tom's Tools? Yes, there is a discount for Tom's Tools members. What you need to do is you need to contact us at memberservices@gulfportanalytics.com. Member services at gulfportanalytics.com. You let them know that you're a member, and Jay is going to give you the member link if you already have tools. Because if you have tools already, then I can take that off the price, and that will be a hefty discount off of the already hefty discounted price. All right. There you go.